Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, April 16th. Industrial production rose 0.3% for March. This is an amazing number that will attract less attention than deserved. First, it counters all the manufacturing surveys for March. The March New York Empire State Manufacturing Index was minus 22.2. The Philadelphia Fed Index was minus 17.4. The Chicago PMI Index was 48.2. And the National ISM Manufacturing Index was 48.6. In theory, all of these releases suggested a weak or extremely weak manufacturing sector in March. All were apparently wrong, as the Industrial Production Index is the bottom line on manufacturing output. Second, the increase is highly unusual for this point in the business cycle. During the 2001 recession, industrial production did not rise in a single month. The index fell a total 0.7% in the 3 months ahead of the official start of the recession in January 2001. Then, for the first 9 months of that year, industrial production fell every single month at an average monthly decline of 0.5%. It continued down at that rate for another 4 months to complete a string of 14 straight declines. This business cycle, industrial production has risen for the past 5 months and declined only once. The index is up a net 0.2% since October. The surprising and generally unrecognized resilience of the manufacturing sector is due in part to the surge in exports. Exports tend to be concentrated in large firms, and the manufacturing surveys might not be reflecting the overall strength because they are diffusion indices that rely on the number of firms saying business is up or down and don't fully reflect the size of firms or the degree of strength in individual components. In any case, the bottom line on March manufacturing is that output increased. This sector is proving far more resilient than generally perceived, the manufacturing surveys, which are of questionable value, notwithstanding. I'm Pat O'Hare for Briefing.com. Thanks for listening.